Welcome to Real Estate Live, a real estate show where we discuss and analyze the market and interview exciting guests. Your host is international speaker and author, J.C. Melvin. A brand new show is broadcast every Tuesday and is available for viewing 24 hours a day, 7 days a week. And now, for this week's show, here's J.C.
Hi, this is J.C. and welcome to Real Estate Live. I'm so excited that you're here with us for this show. We're going to interview Mr. Wayne Capurro, a Nevada resident for many, many, many years, and what's more exciting than that, he is the 2008 president of the Reno-Sparks Association of Realtors. So we're going to get a chance to hear a little bit about what's going on in northern Nevada. Before we get there, I just want to share some information with you about what's going on with the Fed. First of all, Fannie Mae and Freddie Mac announced yesterday that they were going to put a freeze on 16,000 foreclosures that were nearing the end of the line. That would be 10,000 Freddie Macs and 6,000 Fannie Mae's. They're going to put approximately a 40 to 42-day freeze starting November the 26th. And they'll reactivate those properties on January the 6th. Now, I think the spirit behind this is so that they're not throwing people out of their homes literally during the holidays. So that we appreciate. The other thing they announced in this announcement, or in this press release, if you will, was that in January, starting the first week of January, they intend to do loan modifications and make an offer of loan modification to 100,000 borrowers out there that may be slightly upside down. Now, I don't have all of the details of how this is going to work, but the Fed looks like they're starting to get some sense of responsibility in this thing, and they're looking to streamline it with the lenders so that the frustration of time, waiting, calling, waiting may begin to go away. So if your clients are one of the victims of this current credit crisis, if you will, or if you're experiencing it yourself, there may be relief coming for you. Again, the 16,000 that are going to get relief, they're selected. The 100,000, I don't know how they're going to come up with who those are, but it should be interesting and it may help quite a few Americans. So, all that being said, let's go to our interview studios and meet Mr. Wayne Capurro. And welcome to our interview studios where we've got Mr. Wayne Capurro from Northern Nevada, more specifically the Reno-Sparks, the president, 2008 president of the Reno-Sparks Association. Wayne, welcome and welcome to Las Vegas, and thanks for being here.
I'm honored to be here, JC.
So I thought it would be great to get some input from the president of the Reno-Sparks Association. So generally speaking, what's the market look like in Reno right now?
Well, I think we've been tracking closely behind what's been going on in Las Vegas. We watch you pretty closely. Your numbers are much bigger than ours, and it seems like we're tracking very closely behind what's happening here in terms of foreclosures, in terms of declines in median price, and market absorption of sold listings.
Can you give us a sense of what the median price might be?
It's down below 230,000 now. We were at 365 almost 3 years ago.
Okay, so you've gone 365 to 230. We've gone from about 315 or so down to 190 last month.
Yes. And
we're expecting a little bit of a drop. Do you have a sense that it's still going to drop a little bit?
We believe it is due to the number of foreclosures or bank-owned properties that are still in our pipeline and coming into our pipeline of our multiple listing server. We're seeing another 5% at least drop in median price coming.
Okay, so we get a lot of licensees that watch this across the country. Now, your membership up there in the Reno-Sparks Association, I think you're somewhere over 2,000 or 2,200 members.
That's correct.
And, of course, we've got our annual dues coming up here for 2009. Do you have a sense that you're going to lose some of those agents?
Yes, we're budgeting for another 12% decline in our membership.
Okay. And I think that's probably similar to what we're looking at here, and probably similar, Wayne, to what's happening nationwide. What advice do you give the agent that's been in the business for 5, 6, or 7 years?
Well, first of all, if they're still in the business, I advise them to hang in there because they've just weathered a very long, we're almost 3 years into this decline now. So they've weathered a storm already, and we are seeing our sales numbers pick up. And things are going to improve for agents, even with declining median prices.
It seems like the affordability index has created a lot more buyers out there.
Yes, that's what we're seeing. We look at an affordability trend line at about 4.1% per year in the Reno-Sparks market. And if you were to project that out over the last 20 years, we're still about 6.5% above that. So we believe we may have that much to come down to hit that affordability line.
So when you say that much to come down, how much more do you think, percentage-wise, that the median price may come down?
I think it's going to come down at least that 6.5%. I believe it may actually go below the trend line for a brief period of time. I think it's a tremendous opportunity for buyers.
What's your advice to a buyer in the Reno area right now?
My advice is to get together with your realtor, start looking. This is the best buying opportunity I've seen in many, many years. And I believe that it may get a little better in the months ahead, but it's not going to stay down forever.
Right. Right. It's going to, what goes down must come up.
Yes.
Or the opposite of, yes.
Mm-hmm.
So let me ask you this, because you're a neighbor to one of the most interesting markets in all of America, and that's the Lake Tahoe market. Lake Tahoe is generally considered a second home market. You've got homes up there worth millions and millions of dollars. Can you give myself and the viewers a sense of what's going on in the Lake Tahoe market?
I think that all of our markets in Nevada have been hurt by this real estate correction. But it seems to me, from what I'm hearing from my friends in the Incline Village Board, that the high-end homes, or the lakefront properties, the really high-end properties, seem to be doing better at holding their value than are the homes that are back from the shore.
You don't necessarily see this market as a doomsday market for everybody and everybody that owns a home. There's actually an opportunity here.
Oh, I absolutely think there's an opportunity for buyers. It's been very painful, the level of foreclosures and the people losing their home. It's hard to watch. Every time we go out and take a listing these days, just about, we're dealing with somebody who's having a very difficult time. But those are sellers. When you're talking about buyers, there's some tremendous opportunity here.
So 12 months, how long do you think that we're going to have some great buying opportunities?
At least 3 months, possibly as much as 6 months. I think when the new administration takes over, when some of these federal bailouts, so to speak, start to kick in, we may see things reverse rather quickly.
Right. It seems like the Fed has made some promises with the $700 billion bailout and kind of given the American public some hope. And I'm a little concerned that they are, after making those promises, I'm a little concerned that they actually have the ability to deliver.
We're all concerned about that, and we're looking at it very closely. I think that there is some sincerity there. I believe that they really want to help, but the bureaucracy that we have to deal with right now is so cumbersome.
What's the Realtor Association doing?
All of our agents who are active are experiencing tremendous difficulties in dealing with the lenders that are handling the foreclosures. The short sales in particular are a problem. And we're trying to get to the bottom of what the problem is. We're trying to exert pressure in any way we can to get the banks to be more responsive, more communicative. And we have to rely on our National Association for this, because I think it's going to have to come from the top down. Right, look what's happening with Fannie Mae and Freddie Mac. They're key to the solution, and yet they're a big part of the problem.
Well, right, certainly they supported underwriting loans that had no business being underwritten.
For quite some time. Very much a part of this problem.
Why should the American people be responsible to bail out for $700 billion people that made a bad decision, including Fannie Mae and Freddie Mac?
It's a good question. On the other hand, we may have the whole world's economy hanging in the balance as to how we deal with this problem.
Right. Because our regulatory body allowed Fannie Mae and Freddie Mac to underwrite, support, promulgate, and promote horrible loans.
We have to hope that these kinds of abuses never are allowed again. We learn lessons from what happened.
Well, okay, that being said, I want to thank you for coming down to Las Vegas from Reno and sharing some time with us, Wayne.
It's been a pleasure.
Well, my pleasure. Thank you.
Thank you, JC.